Greeting algo artisans. We're going to look at Pendle today. We're going to take a look at the charts and we're going to take a look inside the coin in the metrics to see if right now is a buying opportunity. We're going to jump into the charts right now. We're going to get into the charts first. In a crypto bull run, right, you're going to have pullbacks. Happens so far every time. Even most periods of expansion are going to have contractions. The time to buy is not when things are expensive, it's when things are cheap. And things tend to be cheap after price has gone down for a while. The question is, will price go lower? Pendle is a better deal than it was 6 weeks ago. Pendle is a better deal than it was when it was up at the $7 range. It's now $4 roughly. So if you were going to buy Pendle, right, and you planned to sell at the end of the bull market, and if your estimation was correct and the price was going to go up, then buying it now would have been better than buying it 5 weeks ago when things were going up. So arguably, being a contrarian can pay off as long as you have a little bit more data and understand where price might stop going down, right? Because no one wants Pendle right now. Everybody's selling it. Usually that's the time to consider buying. Is it the time to buy? We're going to take a look at that right now. Okay, so that's just a little bit of contrarian market logic, right? You want to look at purchasing when nobody wants it. Now, on the way up, Pendle did a consolidation. It consolidated between roughly 226 and 367, 368, right? And so there's a really good chance the price will come back down to that consolidation. Now, before it went up there, price also consolidated roughly between maybe 92, 93 cents and about $1.37. And if the crypto market takes a much harder hit, or perhaps traditional finance takes a hit and drags crypto down with it, those are also areas the price could go to. So we do have some decent areas down to which price could go, and we'll map that out with some drawings in a minute, but let's also consider the upside. That line that I drew is an impulse. It's a hard move in one direction without a pullback. I'm going to take this Fibonacci extension tool, and I'm going to go ahead and mark out the Fibonacci extension areas, because that's where price may go. Price turns around and heads back upwards, right? Now, where might it turn around? We talked about these areas where price might grab liquidity. The bull market and the halving have behaved a certain way for most of the halvings, where after the halving, price tends to go sideways and even a little bit down for a while. And we're seeing that right now. If you look at Bitcoin, price is slowly kind of going sideways and possibly heading a little bit down. And that tends to last about 10 weeks. Now we're, I'd say, 2.5 weeks into it. So I think it's safe to say that for another 8 weeks, we may see the same kind of price action. So let's map that time out. So about 8 weeks is going to be this right here. Now during this time frame, price is probably going to continue to go sideways, maybe go a little bit down. And then after that time frame, according to history, price may start to head back up, perhaps late June, early July. In the meantime, we think that price is going to head down, and the algos are bearish. The algos do say on both the weekly and the daily that price is likely to head down. There's a good chance it will grab liquidity right in this box, anywhere from 220 to 360. That might be a good place to consider for me. You got to do your own research. This is not investment advice. If I liked Pendle, I would look for this to level off and maybe bounce. And then I would take a look at my algos and determine whether or not I thought price would go up from here. If the market is more bearish than we expect, more bearish than normal, price could come down to this, this lower consolidation. And that's between about 92 cents and say $1.40, roughly in that area. Again, if price is more bearish, price breaks down from this consolidation, then another good place to consider buying that I might look at is going to be in the dollar range, maybe the $1.20. And it may just bounce right off the top of this area. If Bitcoin is more bullish than expected, then price may not even dip into any of these areas. Price could easily simply bounce right off of 365. That can happen too. And that might be a place to consider for me buying some Pendle. And the great part is I use algorithms that can tell me if price may be flattening out. Algorithms, price structure, but this is the basic plan. These are the areas that I'm looking at. The edges and of these rectangles, these consolidations, these liquidity zones. Of course, comparing that to algorithms to see if everything is flattening out. And of course, using Bitcoin as a guide, because if Bitcoin decides to go bullish and really starts to pick up, then I have an idea that these altcoins might go along with it, especially a coin like Pendle that probably has a fair amount of collateral in crypto, if not all of it. So we want to understand that coins like in DeFi that are based on cryptocurrency, a lot of their total value locked, a lot of their TVL is going to be in the form of cryptocurrency. And as Bitcoin goes down, it drags down all the cryptos with it, TVL goes down, and arguably people are going to sell off because this coin's not what it used to be. Coin's value will go down with it. Not to mention that as Bitcoin goes down, crypto goes down anyway. So let's talk about our upside targets and what those trades might look like. We're going to have a possible buy. Now, if price were to head and simply bounce right off of the top of this zone, then I would think my trade was going to look like this. And I would look to enter, once I get confirmation from algos, then I would have a trade that looks like this. Now, this is not a buy and hold strategy. This is an actual trading strategy. Like, I'm going to buy it and then sell it in a period of time. And the stop loss will be based on structure and a few other things. So it could be a 5-to-1, meaning that I could risk $1,000 to make 5,000. Would be a beautiful trade. I might take some profit on the way. Might take some profit off at this 272, so it might end up being more like a 4-to-1. But that's the basic idea of the trade and the price movement. The deeper it goes, then the better this looks, right? Then you have a much deeper entry, but the same plan either way. Now, one might want to take profit at the prior all-time high because sometimes things reject there. But in the Bitcoin bull market, when the prices start to go back up, generally they continue to go back up. It's what has happened every time before. There aren't a whole lot of halvings. We don't have a lot of data to create a very strong thesis. The data that we have points to that thesis for every single halving that has ever happened so far. Once the Bitcoin price starts to go up after the halving, especially if it makes an all-time high, then the other coins go up with it. So this is a decent plan for Pendle. Now the question is Pendle something I want to purchase? Do I believe in the product? Do I believe in this DeFi? Well, let's talk about what Pendle is. This is right off their website, Introduction to Pendle. Basically, this is DeFi, and this is a yield farming type application. So they wrap yield-bearing tokens into SY, which is wrapped version of the underlying yield-bearing token. So this starts to get a little bit technical, but these tokens that are split, you get to take those and you get to trade them through Pendle's automatic market making mechanisms, right? Totally understanding the automatic market making, understanding how that works is not required to trade these things. You can just basically trade them on their platform. Automatic market making is a way some of these coins will actually make money. Usually it's going to be what's called delta neutral, where they can make money if the market is going up, or they can make money where the market is going down. And I'm pretty sure that is the case with this. Even in a down market, something like this can generate yield. What is going to probably determine how much yield is available is going to be volatility and volume, which go hand in hand. Because if you're market making, you need the price to move. So for price to move, there tends to need to be a lot of volume. So as long as price is moving, more yield can be generated through most market making scenarios. Now we get down here a little bit further and it starts to get more complex, and we're not going to go too deep into it, but essentially what they're doing is they're fitting into the real world asset group, which means that the possibilities for the price of this coin are very high. If real world assets flow to Pendle because of these yields that they're offering, then this is remarkable because we're talking about trillions of dollars. So the potential for this is pretty high as far as how high this coin could go in price. I wouldn't even try to guess what the top could be on Pendle. It's $4 now, which is a good, a pretty high price as new cryptos go. It could go to 400 for all I know. So very, very hard to put a pin on something that's going to derivatize real world assets. And as a matter of fact, they're going to derivatize TradFi interest derivative market. So they're going to effectively, if I'm reading this properly, derivatize derivatives. Massive, massive earning potential. Now, why would people do that when they could just make money elsewhere, where they can make money in the regular derivative market, right? Well, it's going to be the yield. So let's take a look at what kind of yields this is offering. So here on the Pendle website, we're seeing liberating yield. Now, this STETH is 4.22%. I imagine it's a very low risk. EETH fixed yield at 26.55%. RSETH at 31.30. From a traditional finance mindset, these higher than 20% yield are not realistic. I'm not saying that they're not realistic in crypto. I'm not saying that it's a scam. I'm just saying that in most financial pictures, this is not realistic. I remember back when Luna was getting massive amounts of yield, and we all know what happened to Luna. Now, times are different, things are different, but are they different? You never really know. That's why we don't give investment advice, because products like this, you just don't know how it's going to end up. Even the best stock and the best company in the world, you name a stock, Apple, whatever it is, that can all fall apart. It's not just in crypto where you're risking your money, but crypto is a little bit more risky. Like, we've seen some things happen in crypto in the past few years that we did not see with like Ford and GM and some of those big stocks. Offering a 26 or 30% yield does have me wonder how they are actually obtaining this. Now, is it that these yields can happen because of so much volume in the crypto market, so much volatility? I'm sure there's an explanation somewhere. And again, I'm not saying that this is impossible. I'm just saying that it makes me wonder. So here's your TVL, total Total value locked, $4 billion. Trading volume is 15 billion. That's a fair amount considering TVL. It is cross-chain compatible. Ethereum, Arbitrum, BNB, Optimism, right? There's the yield tokenization, the market makers, we've talked about these. VE Pendle, locked Pendle for a stake in the protocol. They are heavily audited by Aki, Blockchain, Debab, Dingbats, C. Michael, Watchplug, at least now. I don't see any audits from KPMG or anybody like that. You do have the ability to look at these audits, and you have to take them for what they're worth. I don't know anything about these companies that are auditing. They could be awesome. I have no understanding of the quality of those audits. I just know that they exist, and they're right there on the website. Binance is involved, so Binance is trusted. Spartan, there you go. Crypto.com, that's actually a known, more of a household name. So there's a few household names in which this is trusted. It seems like a pretty decent product. I know a lot of people who are very interested in it. As far as staking on this, not sure if I'm going to do that, but I would love to make 30% fixed yield. 30% APY is beautiful. Very hard to get anywhere at all. So let's take a look at some recent news and find out why this is headed down. So this is an article here from bankless.com. Trouble for Pendle. The relative valuation of Pendle had an outperformed BTC by nearly 300% during 2024, bolstered by a 2.5-week pump that began in the middle of last month and allowed the token to achieve all-time highs against BTC. While the TVL inside Pendle's smart contracts, that's the total value locked, reached 5.4 billion on Wednesday, the application experienced its largest outflow on record yesterday, losing 18% of its deposit base after the maturity of 5 separate pools occurred. So this is, you're locking your money in to get yield. And once you have made that yield, you're going to pull your money out. And 5 separate pools all matured. So people pulled their money out because they made the profit. And now the crypto is going down. I imagine they're keeping their powder dry. Perhaps they want to be safe. They got this amazing yield and they're going to take the money and run. Or maybe they're going to wait for prices to go down. Maybe they're waiting for better offers. To put this in English, there are some other platforms that have, locking, where you can lock your money in and get yield. Like Athena works like a bond. We've done some shows on Athena before. And what they're saying is that the implied yields that speculators can earn on the underlying have been compressed, right? Because prices are all going down. And the underlying is with Pendle, whatever coin you're going to wrap into their token that you can trade. So this is all really simple. Money flowed out, prices are going down, people are not so confident in the yields. And the decrease in yield has led to a substantial drop in transaction activity, which amounted to meager 23 million on Wednesday, the lowest recorded volume since January, and a steep decline from the roughly 250 million in daily volume that catalyzed Pendle's most recent period of outperformance in March. Transaction volume, like we just talked about, is going to have a lot to do with the amount of money they can make. Price has to be moving. So long story short, it has performed really well, and it says here at the very end of this that, let's just read the last paragraph. Pendle has been one of the best performing established DeFi assets during 2024, but it may be time to acknowledge that protocol's best days are behind it, at least for the foreseeable future, considering that the airdrop distributions users have been speculating on are coming into full swing, and the protocol has seen minimal adoption of lower yielding pools like STETH and AUSDT. So not a lot of people are playing in the lower yield pools at all. And the airdrops, the money that has flown out, of course, that deflated what they needed. That deflated their TVL. And the more TVL they have, the more it's worth and the more money they can make. So this is what you deal with when you have derivatives. When your underlying asset has problems, that underlying asset on which you're making your money, when people start to pull their money out to sell, and when you also have money being pulled out because of maturation of contracts, because of airdrops, then that's going to affect the amount of money that these companies can make through their market making. Question is, do I think Pendle will come back? When you're offering 30 some odd %, maybe it will. It's going to depend on people's thirst for yield farming. When people are so used to getting 20 or 30%, and then you're only offering like a lower percentage, people are going to turn their nose up at it. Time will tell on this. Maybe they'll introduce some new products. Maybe they will be a little bit more competitive with their lower yielding products. I know during a bull market, most everything is going to go up. So what'll probably happen, at least to some degree, is that people will start to make enough money on their holdings to where they would rather get some yield on their holdings as well. And then money might go into Pendle, or maybe they'll start doing more airdrops to attract more money. I don't think it's over for Pendle. I think that also a lot of people who are simply buying Pendle without worrying about their products are going to be looking at the price. And I think a lot of people who made money on Pendle are going to remember that they made money on Pendle, and when price drops into one of those zones that I talked about, people might buy in. So that's my look on Pendle. Definitely an interesting coin. The type of yields I'm seeing are either amazing or scary, and that depends on your view and your risk tolerance. Not investment advice. Please do your own research. Now let's take a quick minute before we move on and listen to Think Free, who has some nice things to say about us.
This is Think-Free's Algo Factory testimonial. I began my prescription for Algo Factory the summer of 2023. I am now 70 years old and I have set a goal to have a supplementary income by learning to trade. I have been putting in about 3 to 4 hours per week of study time. In spite of this small time of commitment, I am determined to learn to trade. I set a goal of slow, steady progress in my learning. It is now March of 2024, and I have been delighted that through the articulate speech and hands-on help and support from Cowboy, I have developed an algo that looks very promising. I've come to appreciate Cowboy's remarkable ability to communicate and teach. He's not just knowledgeable, but also very creative in his shoot-from-the-hips approach. I wonder, is that where the name Cowboy came from? I have followed the Algo Cowboy and V the Guerrilla Economist for more than 3 years and have found them to be very respectful, caring, and firmly rooted in reality. By that I mean they have a clear, deep, no-nonsense understanding of the world we live in, not just in trading and economics, but geopolitically and, dare I say, spiritually as well. For me, this fact makes working with them all the more gratifying and secure. This has and continues to be a great investment of my time and money. Also ends up being fun with the humor that is shared amongst our Algo Factory group members. Thank you, Cowboy.
I hope this video was helpful. Please come over to algofactory.tech. We help people build trading methods, trading algorithms. Nothing's guaranteed in trading, but if you come on over and you work hard, you will have a probability of success. We hope to see you over there. Don't forget, trade your job, upgrade your life. See you on the next one.